Good evening. This is the Elliott wave update for the S&P 500 and the NASDAQ 100 for Wednesday, October 12th, 2022. The markets again really remained within a tight range, even with the release of the PPI data. And in fact, beginning here with the S&P, we are in the hourly, that everything stays the same. What we're counting still stays the same because we are sitting in chop. And that's now including the PPI and what took place yesterday afternoon when it became known about Bank of England and what they sent out, et cetera, et cetera. That had a bigger reaction than our own PPI. So I'm not sure as to why, because it did show an increase. And again, all eyes now turn to the CPI, which did give us a larger reaction when reported in the past. So, and then again on Friday and also tomorrow, CPI and jobless claims. So it could be almost a double push. But what I'm dealing with here is that the patterns themselves are not bullish and not bearish, are just kind of sitting sideways. And so our moving averages tend to kind of slow down, start going, wondering, okay, we'll follow along more flat. We're going to flat line, not really go up, not go down. And that's kind of what's happening. The 8 and the 4 will react a little bit quicker, and that is going to follow the market. But we remain inside a range that was set yesterday. And that is 35.79 on the bottom and 36.53 on the top. And we've actually narrowed that today. Now getting closer to the bottom than we are to the top. Moving forward, again, pre-market, we have the release of the CPI data and the latest jobless claims data. And so that is going to have a reaction. We had one today. It was very short-lived before the markets kind of calmed down, but did continue. The intraday moves, I will say, were quite impressive. And I do want to spend some time just going down and taking a look at a 1-minute chart and see, because the moves were okay. But you kind of had to be very accepting to the periods where the buyers were there and the periods when the sellers were there. Because both provided the moves all day long. So you couldn't really disagree with either if you wanted to participate. So for tomorrow, right now, we leave open the potential that the market may again go up and retest this area up here and possibly get all the way up to there. And if that's the case, that's what we would do, is move this minute wave 2 over to here. It's an A, there's the B, and now we do a C. Continued downside, that gets left as a 2, and it's a 1, 2, and you can see the rest. It's very chop and it's sloppy. So I have to let the market really just tell me where and how it's going to get there. Chopping up and down, it's not really revealing anything other than pure, unadulterated indecision. And that's true because we don't know what the number is. We don't know what the jobless claims are going to be. So today, again, just saw different areas. Again, some like Amgen, some of the other biotech stocks, Moderna. But a lot of things were just kind of bouncing around. But a lot of that, I believe, was just due to options trading. So there was plenty of movement to trade within those stocks. Back to the S&P, leaving open the potential that it can go up to 3650-ish, maybe even as high as 3687, which is where the hourly 200 SMA is sitting right now. If we start to break down, those are the fibs that are still on there. We have 3560. It's 61, 62, so that's a little bit of a zone. And then 3533, 3505, 618. And then I'm maybe going to open these a little bit more. and then 34.65, and then we start getting down towards where minute wave 3 would be equal to minute wave 1, and that's down at 34.14. I would like to see it come a little bit further below, but these are pockets of support, and I think that's going to exist until we're actually down past there. We have lots of pockets of different fib combinations that point to these levels. And as we said yesterday, that basis what the chairman CEO of JP Morgan was talking about, that the markets could lose another 20%, and then you match that out in the S&P, and I believe the number was 3270 something or 80 something. So it's down there. And so all things are possible. I think it's going to, if it's going to come in, it could come in quickly. It could come in quickly. So we get that 2, and then we're into the 3, and we get that and get it all done, and boom, we're backing off to the races. So that's that. And what I wanted to do is to just take a peek to show what the 1 minute looks like, so that you can see. Now, of course, the market's now firmly closed and we're waiting for Globex. But after hours, even still, you can see some of the indicators that I have on the chart suggest, and they point to different levels. And again, if you're not willing to totally pay attention, but you could have caught that move into the bell. It was nice if you trade into the bell. So again, plenty of money to be had, and I can go back. There you can see even more. And if you are looking at Elliott and learning Elliott, it's, those are a series of 3s. And now you're looking for 5 more down. And I believe 1, 2, 3, maybe, which would consider we're going to go up, but I don't believe so. This is all appearing to be a set of 3s. So again, corrective, looking for impulse down. So again, 1 minute. So it's going to happen much quicker. So there is plenty to do. Now, I'm going to move over to the NASDAQ and quickly take a peek there. And same story. Here we are sitting in the exact same position as we just saw in the other chart. So all of this stays in place. And we're just going to take a look at, there you go, what we are doing today. And there you go. All very sideways, and as we saw on the very small intraday on a 1 minute basis, it was all 3s. So on an hourly, we call it chop, but it's all 3s, and it's kind of a triangle. And we'll see how this all comes out, but it's the same story. Our moving averages on the NASDAQ are a little bit closer. The 50 now is getting itself down to just about 10,900, and that's the 50 SMA. The 50 EMA is at 10,945 right now. 940, excuse me. And once the market gets up, then it comes back down. And that was the PPI this morning. But you can see, boom, nice start. And then, nope, stop, buy. Like, well, that was pre-programmed, I think. But in any case, the market, I believe, will be making up its mind. And in this one, I'm looking for it to kind of kick in and get stronger because, again, I already have minute 1 and 2, and this was sub. This is sub minute. So it's like you can't, there's only so much further I can go. It's like time to move, boys. Either you're going to finish it or you're going to go this way and finish the 2. So and that would fit because if you see, it's just moving nowhere. It's not impulsing. It's just kind of chopping and a little bit higher, then lower and a little bit blah, blah. So resolution time. So if it's a 1, 2, 1, 2, 1, 2, it's like, okay, what are you going to tell me tomorrow morning? That would point very strongly down, but I can't call it that way. We have to leave open the potential that the NASDAQ will get back above 11,042 with the possibility. So what I can do very quickly is just to toss in retracements. And those retracements suggest that this minute 2 could go to 11,150. Technical. This is just a technical picture. I am not adding anything else other than this is just a technical picture. I couldn't tell you what realistically would have to happen, what kind of news you'd have to get, or what would spur that type of buying, other than somebody spinning over super oversold again, or that the Fed is definitely going to pivot, or whatever the deal is. But it has to be something that's going to jack people right back into buying everything under the sun. And that will drive it. And so being prepared in a way. So if we're just trading technically, well, you allow for it. Doesn't mean it's going to happen, but you allow for it. And we can. And this wave can do it. I would just change this over to here, and this would be A, and this would be B. And we're working it higher in a C. And so it would be quick, just like we're looking for the downside. So we're at that inflection point. We're at that point. Again, continued breakdown. I'm going to remove that. I'm just going to go back and let's see about adding what we have for that. I'm going to go back over to the others with the smaller or larger 3 that we could be getting inside of all of this. So for that, we have down here 10,098. So really the market could tumble another 800. Is that where we are? Yeah. 800 and be down here. And then do a 4th and then a 5th. Excuse me. To complete the minor 3, and then do another minor 4, minor 5 to complete the intermediate. So lot to come, lot to go. We just need to get through tomorrow. And we kind of have a thought pattern and we have an idea. Stronger upside, it can, simply because, yes, the market technically is oversold. So yeah, they could push, and that would be 11,200. Can they get up to 11,500? It changes the overall larger pattern a little bit in terms of this then. But with that break below that low, which was a 10,068, I believe, 10,906, excuse me. Once it broke that, minor 3 is getting a confirmation, because then we said that that's only minute wave 1. So for this thing to go all the way back there, then this has to somehow be a B wave, because this is A of 2, that's B of 2, and now we're going to go C of 2. This gets moved over, then we drop off the face. So these things are still there. And why? Because A, the market's not just tripping over itself to force itself lower. If you're day trading, again, we're having decent inside moves, and the NASDAQ's not any different. It's a little bit wilder, I will say that, because it can get pretty thin. And here's the 1 minute. And these are pretty accurate. Not totally, but fairly good. That was a good short, and that was a good cover. Now, you're not shorting at that high. It's just giving you the bar on which it gave the short. And it could have been here, which is likely, because these are moving average. They're triggered by moving averages, and I believe volume. So it was good, but you have to practice, because there are times when it's going to come all the way back up, as it did before it really starts to drop, come all the way back up and then truly drop. So being able to sit through that and trust that indicator takes, you have to see it, then you have to see it again and realize, yeah, you could make money there. Not a whole lot, but you just follow, you become mechanical, and it works. Back out to the other chart. There's plenty to trade. Day trading, I think it's there. You got to focus and you got to be there and take a step back, and the tick by tick can make you crazy. So you have to take a little bit of a view in a 1 minute chart that just kind of focuses and goes. You're not focused on that tick to tick and suddenly the quick $2 or $3 jumps, $4 jump, $5 jumps, because you're looking for a $10 or a $12 jump, maybe even more. Okay, I am going to end it there. Tomorrow morning, again, just reminding us, we have CPI and jobless claims. Based on today, which held to the PPI, does not necessarily have that great of a reaction, where the CPI in the past few times has had a pretty strong reaction to the downside, because we continue to see that inflation is increasing, at least to us, the consumer. So be on the lookout, because I really don't know what the market's reaction is going to be. Obviously, there's things on the board that they intend to buy, because on top of that, that's Thursday, we get all this news, and Friday's expiration. So the battle for example, 140 in Apple is on. The battle for these different levels in a lot of these stocks now exists. All right. Next update will be on Thursday, the 13th.